it has a lot of time to digest the whole price range, and therefore I think a shorter time period, like a 5-minute, hammers probably don't have enough time to develop, and B, there's not enough price action, volatility, or market participants in that 5 minutes to really make a true hammer form because of the Forex bid and ask method or system of trading. So in any event, let's not be too rigid. If the psychology of the market is that if it's at a bottom and you see a long shadow and a real body and it's close, at least the real body is close to the high, there might be a little shadow, a few pips or so above the real body. So that is acceptable in identifying a hammer bottom. Now I believe in a hammer bottom, a white or green hollow body is a little bit more of a stronger or reliable indication that the bottom has actually formed. And what that means is that the market has closed above the open, right? A green candle means the market closed above the open. Now, there's an example, and I love to show everybody this example because most people don't understand how powerful hammers are. This is the euro currency. This is actually the all-time low after it was introduced for the very first time in 2000. If we notice that as the market was introduced, the low in 2000, this is October 2000, was formed by a hammer. In fact, the market came back and made a double bottom down here. Look at this price, 83. The market did what? It made a low by another hammer. Can you imagine? This is why using stop close onlys are so important. Can you imagine being long the market, placing a stop below the low, and then all of a sudden you got stopped out, didn't notice what happens. Immediately, the market takes off without you. And we see what? Green candles, higher close than open, higher close than open, higher close than open, higher closing highs. That's sign of a major reversal. That sequence of events after a hammer, by the way, shows up more times than not, even on 15-minute time periods. So you want to pay attention to the hammer making a secondary low. I call the hammer a seek and destroy stop pattern because really what it's doing, it's going after people's stops below the market. You see a hammer followed by a doji, wait for what? A high close above the doji formations, and we should see immediate results. And of course we do. Let me share with you a particular study, a back test study that was performed by Genesis. Now, this and most of the details here that are in this trading course, especially on these back tests, were done specifically, and I hate to use the word, on the futures market, and here's why. Because the computer needed actual information from a centralized marketplace with actual trades rather than bid and ask trades through a Forex. So while we have various different Forex companies, you can have 5 different Forex companies and we might have 5 different prices all at the same time. And that's because everyone's going through a different interbank dealer. So we wanted to use a back test, something that was we could go back and say, okay, let's prove this. How does this work? And what we did is we used on the futures market based on a 15-minute interval during the U.S. Open Outcry session, which starts from 7:20 Central Standard Time until 2 p.m. Whatever the high and the low was, we came up with this information. By the way, this is why I focus on not only the dojis, the hammers, but also shooting stars. On the euro currency, during that time and in this test, we discovered 22% of the time the low of the session was formed by the doji. 41% was formed by a hammer. So if I just focus on hammers and dojis near pivot support numbers, and if that is assumed to be the low of the day, 64% of the time, that's the exact pattern that is formed that makes the low of the day. Now, it's kind of interesting if you follow this methodology that some people say that dojis form at tops and they're more reliable at tops. But according to this study, and this is an independent study formed by Genesis Software, notice that the high is only 18%. It seems that we have more lows by 4% is formed by the doji at bottoms than it is at tops. That was a very interesting study because most people, every different market has a different personality and every different market has different characteristics, and we're going to show that to you in just a minute. But I thought it was neat that 41% of the time a shooting star was formed by the high. So if I focus on just of course, the doji and the shooting star combined, 59% of the time, that's what marks the high or top in the market. So that's why if we're at a pivot resistance and we've been long and we've been in a